The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have a earnings report today on Apple, so I've started to start the show with that. I've had several requests just to talk about it because Apple has a tendency to move a great deal after the earnings. For many years, it was pretty much a no-brainer that all you had to do was buy Apple before the earnings, and the stock would jump anywhere from 10 to 25%. But since January of last year, everybody that's bought this stock is underwater. I mean, we had some pretty good rallies along the way, but as you can see from this chart, we're lower highs and lower lows over the past year. And it doesn't look any different. Now, the $64 question is, if you'll look at the last three major highs that we had here starting in November, you'll notice that we rallied up to almost a perfect 61% retracement at 112. Then we came down and broke the coveted $90 level. We got down to 89.49, and then, of course, we rallied about 10% over a period from May through last week, where we made a sort of a slight ABCD pattern up at that par level at 100. Now, this is what could happen. This is my best guess, and trust me when I say guess. I'm doing that without too much worry about that. It's not a guess because it really is a guess. But if you'll notice that price up there at 103.69, that's the top of that C leg that hasn't hit yet. But if Apple has really good earnings, my guess is it's going to hit that level pretty closely. We'll check it tomorrow, see whether we're right or not, right or wrong or not. But 103.69 would be the upside on this. And of course, if it's really bad, we could be looking at something, quite a bit lower. And the overall target, you'll see the three ABCD patterns that are there, and they're very clear. They all come in just around the $82. I almost said $82 a barrel, $82 a share level. So that's what we're looking at here in Apple if it unfolds like this. So 103.69 in Apple, and then on the downside, of course, you'll be looking at something lower. It wouldn't take much to break out that old low that we made in July, which was at 93, because this stock moves a lot, and it's most widely held stock. So, a lot of people are, involved in it, and they've certainly been sold a bill of goods. We've said this for many years. Apple gets more free advertising than any stock in any stock market anywhere. And it's always in the news. Now they're saying that they're going to change the management, and that's always a possibility too. So we'll have to wait and see. Okay, now what we need to do now is we need to look at the gold market here. We'll take a look at it as it was yesterday because we're trying to build a case for this price that we're looking at here. You're right, Tucker. Apple gets more free advertising than Donald Trump, and he gets a lot. Anyway, well, I don't know if you folks watched the convention yesterday, but the parade went right past our office there at 100 South Broad Street there in Philadelphia, the offices of Duke & Duke. That is actually the old Wells Fargo Bank building that was built in 1932. If you ever get to Philadelphia, you've got to go into that bank because it's actually where they filmed the offices of Duke & Duke, and I think you'll enjoy it very much. If you remember that scene with Dan Aykroyd when he was playing the Santa Claus and stormed the party and stuffed the salmon and stuff in his shirt. That's where all that was done in the lobby of that hotel. And if you're really nice, and if you talk to one of the managers, they might even take you up to the offices where they caught. They found the drugs that Billy Ray Valentine, i.e. Eddie Murphy, had in his desk. All that's there. If you go up and look at it, it's really pretty cool. Anyway, the chart we're going to look at now is the gold chart. We've been talking about this for some time. This strong level of attraction, I believe. I think that John Logan refers to it as fair value. That's around the $1,300 an ounce level. Somewhere between $1,300 an ounce and $1,296 is what I would be looking for. What we've done over the past few hours here, from yesterday, the last 24 to 36 hours, we did make a double bottom there at the 1310 level. That we were able to rally up to 1325 last night, which was a 61% retracement of the high that we made last Friday at 1334. Now, if this is correct and it starts down and takes out these lows, that's going to give us a lot of information at 1300 in the gold. So that's a really key level. Silver is holding up extremely well. It's still trading, in the $19.70 level, which means it hasn't backed off, nearly as much. And as we mentioned yesterday, the long-term silver chart is getting more and more bullish because it's taken more than 3.5 weeks since the high at 2140 around July the 5th, to make this retracement. So that's usually a positive sign. So we'll see how this unfolds over the next few days. But I really think we've got a chance here at this 1300 to 1296 level in the gold market. The way I'm handling it is, I think that 1300 is going to be like a magical number, like 10,000 in the Dow, and some of these other numbers that we've seen along the way. But I am going to try to buy at 1297. Risking about $8. That's the way I'm going to do it. And the reason why I'm doing that, the 61% retracement is 1301, but the 1.618 expansion of this last swing, and if it comes down really hard, I think that's what it'll get to, comes to 1297. And so I'm willing to take that $4 premium there between the 618 and the 61% retracement, to potentially be a buyer. But I'm long-term, extremely bullish on gold and silver still. I think we've got a long way to go to the upside once we do turn and get this correction out of the way. Remember, we were up for a long time, folks. We were up from around December 30th all the way into early July. So we went 7 months without. We had one major ABCD correction that we talked about quite a bit at 1202. And since that time, the market has had a tremendous move. 1202 actually occurred on the weekend over March 19th. We were doing a seminar in Hong Kong at that time, and the market was pulling back perfectly, and it made a beautiful pattern at that spot, and had a heck of a good rally, and it still continued to hold up pretty well. Hey.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at crude oil. This is what we were looking at. As of Friday, we had hit the 61% retracement spot on. It looked like it was really set up to have a really good rally, but as we can see from the next chart, that we did stay there for 3 days, and then of course yesterday, once we went below the 43.60 level, which had been the low for the last 3 days that we had on last Thursday, that had a pretty good assumption that we were going to go lower, and at the same time that was doing that, we were making new lows in the heating oil, which had held at that 133 a barrel, and then a gallon, I'm sorry, and then also in the gasoline futures, which also started to fail. So it was saying that it was wanting to, to go a lot lower. So the next level that you can look at down here is at the 41.80 level. We're not very far away from that, but you're coming down very, very strong. And so the way I would handle it is I would wait for it to make that low, and then watch for a retracement pattern. After the low is in, it rallies a little bit, then pulls back to a 61% retracement, and then that would give you a very low risk opportunity, because you have to focus on the amount of money that you're going to risk, not how much money you're going to make. And that's the whole key, to trying to, be successful at this, because, you're only going to be wrong X number of times. And what you have to do is, on those trades that you're wrong, you have to keep your losses as marginal as possible. And when you've got a market that has a margin or a cash value of $42,000 like we have here in the crude oil, you've got to be a little bit more careful than if you were to buy a stock that's trading for $10 a share or something like that, and you want to buy 1,000 shares. That's a lot difference, because the margin here that we're dealing with is on the order of 5%. So you have to be extremely careful and at least know what you're doing. And that's what a lot of people don't do. And that's one of the reasons that a lot of people lose money when they trade commodities and also foreign exchange is they don't understand the margins involved. They put their stops too close. That's one of the most telling signs. And the third thing that they do is that they overtrade, and overtrading will kill anybody because as you overtrade, you get more and more tired, and then you make more and more errors, and that's it. Personally, when I make more than 3 errors in a week, then I will tell you that something is really seriously wrong. We've had a request to take a look at natural gas, and I will certainly try to do that. It's going to take me a second to post it into the room here, but I know I'm able to do it because I have it on the watch list, and we'll be able to look at it, but we'll take a look at it. Actually, natural gas has held up extremely well here. In fact, I would be looking to be a buyer of natural gas in the future here, but not quite yet. We want to get it down to the old high, down about 17 cents. Hold on one second, and I will get this out to you. Down around 17 cents from where we are right now, down around 251 a cubic foot. That is what I would be looking for in the natural gas. That would give you a really good spot, to have a situation where you would, be trading a bull market. You'd be buying a 38. Let me put this in here so we can all talk on the same page. Hold on one second here. There you go. As you can see, this has been a really nice chart. We can see the 3 drive to a bottom pattern that we had. That was just so perfect, folks. It was just as symmetrical as you can possibly get. It was just really set up really nice. And if you look on that line right in the middle, you notice that was a beautiful 20-minute line that happened in January. Then we made a new low, and we stayed there for 3 or 4 days, which we were calling that a potential low, and that turned out to be the one. But the big key to this market was back in May, right around the holiday, Memorial Day holiday. You'll see the big gap up, and then the following long bar after that was certainly telling you that this market wanted to go a great deal higher. And as you can see, if you look at the far left at the 1.618 number, at 2.987, that was the exact high that occurred on July 3rd. And now we're in the midst of making a nice correction over a period of 3.5 weeks, which isn't very much. But if you'll notice, the old high that we made was at 251. That would be a 382 retracement of the whole move, and also be spot on CD pattern that could be forming right now. So that's what we're looking at in the natural gas. It's holding up extremely well from a very, very high level, which is really, it'd be nice if we had Mr. Z in the room, because that's one of his, well, he has a lot of specialties. That boy's got his act together, but he really loves trading natural gas, and he's extremely adept at it. So I don't know what he'll be looking at, but my assumption is he'll be looking at some of the same things that we just talked about here in natural gas. So that's another thing. Now, we've had a question about Netflix, the fact that it is potentially being bought out by Apple. Folks, I know less about that than I know about anything, because that stuff is all rumors, and you don't know whether it's rumor or fact. If you wanted to speculate on it. I don't like to use the word gamble, but if you wanted to speculate on it and you wanted to, and I'm not saying to do this, but I'm saying if you wanted to, you could buy a call in Netflix and, work with it that way. But boy, believe me, that's like buying a lottery ticket. So I certainly don't want to suggest you do that. But if you like the stock and you think it's going to go higher, you've got a place to put a stop in. And if the rumor becomes fact, you could make a lot of money. But again, you got to focus on how much money you're going to risk, not how much money you're willing to lose. That's the whole key, is to focus on how much money you can lose, not how much money you can win. And the reason for that is that you're not going to be wrong all the time. Even a blind hog will pick up an acorn some of the time, and that's the key to what we're looking at. Now, one of the key things that we were looking at over the weekend in the letter for 24/7 was the currencies, because we think we're at a really critical level. As you can see here, since we made this 61% retracement in the dollar yen just a few days ago, we've broken down well over 300 pips, which is $3,000. You can see how much volatility you get in the foreign exchange markets, because $3,000 move would be 60 handles in the E-mini S&P, and we haven't seen a 60 handle move since Moses was floated down the Nile. So it's going to be, this is really the place to be if you want to trade, is in foreign exchange. There's just no other thing better than trading the major cross rates. Those are the ones that really set up to be really nice. And since we're talking about cross rates, we'll just take a look here at this euro that we're looking at right now here over the past several days. You'll notice that last night we rallied up to a just about a perfect 78% retracement and 61% retracement up at that 110.25 level. The high was 110.30, and then we backed off. We got major support here at 109.80, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And yesterday we were talking about one of the trades to look at was shorting the Canadian dollar up at that 132.30 level. The high was 132.40. We hit that twice over the last 24 hours. Both times the market dropped about 50 pips. We recently had a little pop here in crude oil to the tune of about 60 points. That caused the Canadian to sell off. So there's really strong resistance in this Canadian up at that level. We had a 3 drive to a top pattern that we talked about yesterday, and that is certainly holding up quite a bit. Now, we do have a Federal Reserve meeting, I believe, this week, where all the talking heads get together to tell us how wonderful things are, and then we will have to move on, to the next meeting, whatever they have. But, the rate, they have this thing so messed up, in my opinion, that I don't know how they're ever going to get out of it. We've had our money supply go from $1 trillion to $4 trillion in the last 6 years, and that trillion T, that's a T, folks. I remember when I was in college, the big word was billion. Everett Dirksen, who was a senator from Illinois, which is the state next to Indiana, well, that's telling everybody something, which is the state next to Indiana, where I grew up, he would talk about a billion here, a billion here. He said, pretty soon you're talking about serious money. And when you get to billions, you're talking a billion, and that's a lot of money. So I don't know if you've ever seen what $1 trillion looks like. It's about 5 football fields stacked 10 stories high, and that's with $100 bills. So anyway, it's a it's a situation where we put too much money in this thing too fast, and but we've got a stock market that just won't go down yet. And yet is the operative word. So we have not taken out any of the highs. We'll take a look first at the New York Stock Exchange Index, which I harp on all the time. Yeah, I do have my memory's still working. It's the other stuff that's not working, Jay. I'm still good with numbers. I still can remember numbers. So I just can't remember all of them. I can remember my number of my first locker when I was a basketball player at Bishop Schulte in Terre Haute. It was 36, 22, 34. I still remember that for some reason. I don't remember why, but it's still pretty good. Anyway, let's talk a little bit more about the market. The NASDAQ has not gone down as of yet. Right now, this morning, we're a tiny bit lower and everything. There is no volatility in the market as seen by the VIX. There are a few people, hardly anyone is making a bet that the volatility is going to increase. And this is the time to do it when you're making new lows. That's the best time to make your bet on the volatility index. So if I were a betting man, and I'm not, I'm an intelligent risk speculator, I would say that this would be the time, to buy the VIX and put your seatbelt on and, wait for something exciting to happen. And believe me, we have enough excitement in the world. Frankly, I don't know if the press is just picking up on every bit of terrorism in the world or not, but it's just every day, several times a day. Sarah was telling me yesterday that someone went a little cuckoo in Japan and went into a nursing home and took out 19 people. I mean, that's just it's just really a sad situation everywhere in the world, and it's just very, very sad. But we'll all get through it, and things will be okay. It'll never be like Camelot, but that's the way it is, as my grandson would say. Okay, let's move on. We want to get on to talk about the Treasury bonds. I think this is a really interesting pattern that we have going on here. Hold on one second here, and I want to make sure I get that Treasury bond chart up. Here it is. There we go. I wanted to show you because we have two things to look at here in the Treasury bond. First of all, you'll notice it's taken 5 days to make a 382 retracement that we made in the middle of the night last night. That came in at the 172.20 level. And if we don't get above 172.20 and then start down, and this is the C leg of an ABCD leg, you're going to be looking at taking out the lows of the Brexit down around 164, not too far in the distant future. That's the way it would look to me. So we'll see. Oh, we got a caller from Palm Harbor, Florida. Jim, are you there?
Yes, I am, Larry. Good morning.
Good morning. What can I do for you?
I wanted to thank you. You always advise people if you got a couple extra dollars in your pocket, go out and buy some silver rounds. And fortunately, around Christmas time, I ended up getting a 100 lot at 14. Somebody needed some cash, and I sold when silver hit 20. I got 20.50 from the coin dealer, and I've traded in for that 100 lot for an 1894 $20 gold piece and a 1898 $10 gold piece. So now I've freed up some storage space in my desk.
Oh, those are some of my favorite cards. Did you buy $10 Indians or $10 Liberties?
I bought the Liberties.
Oh, good. Those are all beautiful coins. They're just so much of a, part of our history, and they're very worthwhile. We have one of our. I'm going to go. You have another question? I want to mention a little story.
What I wanted to ask you is to go over towards. I wish I had paid more attention to PPLT, the platinum ETF, because I did not realize it had that 25% move, also like gold and silver did.
Uh-huh.
And so I was going to ask you to look at the chart on that one, but I was going to ask you, how do you compensate for the gold active contract is going now to the December in a couple days. So how do you, and there's like an $8 difference now. Look at GC.
Well, they should go to October 1st, though.
Well,
October should be.
Well, but all the volume's coming into December, Larry.
Okay, well, they're changing it. It used to be September was the Maverick month, but October used to really be big because October is when it, had a major move back in 1980. October of 1980 was the recovery high at 777 after our high at 860. But all I'll do, we move to December.
August goes off as active in 2 days, and that's right now at 1319 on gold.
Yep.
But the December, which already has 46,000 contracts, is at 1327. So we've got an $8 difference. So I don't know how you're going to compensate for that.
All I'll do is I'll put up the chart and I'll pull in the data for December, and I'll use December as the spot month, and that's all I'll do. But it won't be any difference because the trades tick for tick, so it should be okay.
Okay. All right. And then if you have a chance sometime, if not today, then tomorrow, just to pull up that PPLT.
PPLT? Can you tell me again what that is?
That's the platinum ETF, just like GLD is for gold.
Oh dear, I didn't know they had an ETF for platinum, but they got an ETF for everything. So I'll do that at the next break. I'll pull that up and we'll chat about it then. But I want to stay with me here for 1 second, Jim.
Sure.
We have a listener that checks in every day from Abu Dhabi. An old friend, and he has one of the rarest coins in the world. It is a Isaac Newton gold coin printed in struck in 1796 when he was the Chancellor of the Exchequer in London. There's only 4 of those in the world. He has one. There's one in the Smithsonian. I don't know who have the other 2, but it's valued at well over $300,000.
Wow.
But, just for general purpose.
I want to give you an observation on platinum too. I'll hold through the break.
Okay, great.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time.
Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we have Jim from Florida on the line. We were talking about PPLT, which is the ETF for platinum, and I've posted that into the den. Jim, I hope you can see it, but you'll notice that it made a 3 drive to a top pattern here about three weeks ago.
Right.
And that's perfect. And the most amazing thing is this thing has not backed off at all. If I were short this, I would frankly be scared to death. I'll do the platinum because that's the backing behind the ETF. But you'll notice it has the same pattern at that 61% retracement. But we've been here for 3 weeks without any type of correction at all. And that's one of the things that makes me wonder, you know, if this correction in gold and silver is finally coming to an end. I would like to comment about ETFs, folks. ETFs have gaps, and the reason for that is they don't trade the same time frames that we have with the futures. Futures trade, you know, quite a bit of the time. They trade 24 hours a day, you know, 5.5 days a week, whereas we have only 8 to 10 hours sometimes in the ETF. So remember that if you want to get into it and you have to pay up for that gap, that has to be considered as part of your risk. So that's very important. Sometimes if the gap is too great, I wouldn't even touch it, but that's my 2 cents worth.
Yeah, and unfortunately, PPLT does not have options, and I guess that's why I did not look at it. You know, looking at the chart now in retrospect, when I didn't realize that it traded under 80, that would have been a good long. But I want to just give you a comment on, at least locally here, there are no coin dealers at all that inventory platinum coins. And in the real world, you're really talking we're in the futures are such a discount to gold. In the real world, if you can pick up an ounce of platinum for $1,200, you're very lucky.
Mm-hmm. Well, the thing in the real world, that's true. But in the coin business, you know, platinum is really good for jewelry because it's very, very hard and it doesn't scratch or anything. But the problem is that people, you know, it looks like silver. You know, it's more brilliant than silver, of course, but the person that doesn't know the difference, you have to find out, you know, by the ring. You know, I think I've mentioned that the way they do this still to this day in the markets in Saudi Arabia and other places, they will put the coin on a little tiny bezel, and then they tap it with a little gold or platinum hammer, and by the ring they can tell you, you know, how much the carats are within that. That's how they do that. But assaying these things from a coin dealer's point of view, it's more difficult with platinum because everybody sees gold and silver. Platinum is much harder to figure out. Right.
But it's just interesting that there is no availability locally unless you're not going to buy a platinum coin for spot or 50 over spot. like you can
No,
gold.
no chance. And then not only that, if you wanted to buy it in bulk, you got to put an order in on it, and it might take a month to fill.
Right, and they're going to charge you an 85. The quote I got, if you were trying to get a bullion platinum eagle, they're looking at 85 to 95 above spot, and delivery in a couple weeks out.
Yep. It doesn't have the liquidity, so stick with the silver coins and the gold coins, Jim. You can't go wrong, and keep those gold coins forever because they don't make them anymore, and they sure are beautiful. And what is the grading on them? Do you know
Well,
the one
is actually slabbed, Larry. It's an MS62.
Wow, that's a really nice one.
Which that and then this other one here is almost uncirculated. It's an 1894,
Wow.
$20 gold piece, and I'm looking in a drawer here. So I've been just steadily since you've been, preaching for a couple of years. If you got an extra couple coins, just
Yep.
put one in the drawer. So I've got a pretty nice drawer.
But you keep them in your drawer?
Well, I've got to make that.
I'd like to have your address, Jim. I'd get a safety deposit box. You can rent one for like 20 or for 50, 60 bucks a year, and it's certainly worth it, to do that. So
Yeah,
I would.
I've got one. I just got to actually
Okay.
inventory what I picked up and make that run.
Okay, that sounds great. But
Thanks,
always,
thanks for that
protect
tip.
yourself.
Thanks for that tip also.
All right. Thanks a lot for calling in.
Have a
I
great one.
appreciate it. You bet. Okay, we've got a situation now, boys and girls. Those of you that like Gartley patterns, we're looking at a perfect ABCD pattern in the E-mini S&P here at 2167. If we get above 2172, this would certainly be wrong, but 2167 does complete the ABCD pattern here. And whether it works or not, I don't know, but that's you pay your money and you take your choice, but that's the way it looks like from the cheap seats here in Tucson, Arizona, where we're going to be 109 degrees today. So it's going to be a little balmy, and then the rains come in Thursday, Friday, Saturday, and Sunday, and we'll drop off into the 90s. So that's the end of the weather report. With one other thing, we have 100-degree weather, of course, in the city of brotherly love, where the offices of Duke and Duke are, and we'll be watching some of the things from the convention. My wife keeps watching the program each day, hoping she'll see her two grandsons coming home from school, but fortunately we haven't had that luck so far. Anyway, that's what we're watching so far today. Remember that, as Jim mentioned, we are going to be switching over in a day or two. We're going to be switching over to Christmas gold, December gold. It used to be we switched to October, but evidently the volume is coming in on the December gold. There'll be an $8 difference, but the swings will be the same. There won't be anything different from one to the other, so it should be we'll be able to see. One other question someone had from Florida, our good friend Dr. Scott, asked about it's not easy to verify platinum like it is gold. That is absolutely true, and the reason for that is platinum is a very, very hard metal, and not many people are familiar with its qualities. You have to be a jeweler or a manufacturer for catalysts or something like that. Then you'll have a better idea of what platinum really, what the value and everything is on it. But with gold, it's very, very easy. If we were at a video here, I could show you, how they do this. It's very simple. You could do it with your finger. If you put a silver dollar on your knuckle and then took another silver dollar and tapped it on the side, you would hear a very distinct ring. And if you did the same thing with a gold coin, you'd hear the same ring, but it would be different. And that's how the people in the Arab countries, they'd have their little scales, but to determine the assay value of it, that's how they do it. And it's really amazing to see them, but they've been doing that for thousands of years, and it's, well, maybe not thousands of years, but hundreds of years, and it's still, it's still working to this day. So the main thing is, if you're going to buy coins, buy U.S. coins, gold or silver, and you're going to be fine because everybody knows what they are and pretty much exactly what they're worth, without too much money. I made a living at that at Drexel for 1976 through 1982. So you want to know what they're doing. Now they've had a lot of problems when gold got to 1,500. Well, somewhere above 1,000 and 1,500, there became a lot of counterfeit gold, which is out there, and that's basically gold plated. But if you do a simple assay, you can do that very easily yourself. You realize that it's the ring is distinct and you can't miss it. it. It's just like a a church bell. It's really tells you where you are, whether it's real or not. And then you just weigh it, and then you know that how many grams to the ounce, and we're pretty much where you are. But the easiest thing to do is to pick a NCGS coin dealer or ANA coin dealer. The PCGS is Pacific Coin Grading, professional coin grading service that was started by Bobby Hughes way back in the early 70s, and also the American Numismatic Association, the ANA. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Good afternoon, folks. We got just a few seconds here to finish up the show, but I wanted to talk more about the Treasury bonds. We're down a full point from the high we made in the middle of the night. That was at a perfect 382 retracement at 172.24. If we don't get above that here the next day or so, there's a really high probability that we're setting up another ABCD structure to the downside that would take us below 164. This could be the canary in the coal mine, folks, because no one well, not almost no one thinks that this could possibly happen, but we've taken 5 days to only make a 382 retracement. Now, if this were a roaring bull market, one would think that this thing would really be screaming and we would be, heading off to the 180 level in bonds, but we've not been able to take out the 382. And not only that, it was a perfect ABCD there, which makes it a Gartley at a 382. And if you measure the ABCD swing, it takes you to 164. And that would hurt a lot of people because you'd be taking out the lows of the last 6 months. And it would also mean that rates would be going higher and not lower. So that's the quagmire that we're in here in bonds. Now, if we do get above, the 172.24 level here in the next day or so, then that would set up the 61% retracement up at 174. But, you have to ask yourself, why did it take 5 days to only make a 382 ABCD level? That's usually a sign of extreme bearishness, and we've already backed off a full point from there. So just be careful if you're long these bonds, because you could be getting into a little bit of a problem. Long term, maybe they go back to 177, but right now we're in the midst of a pretty severe correction in Treasury bonds. We're down almost 7 handles from the high. We've been down more than 7 handles, so it doesn't take much to tip this over. Anything below 170 now in the Treasury bond, that's 1.5 points from where we are right now, would certainly set up this ABCD pattern on a longer term basis. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.